Welcome to Momentum Monday. Today is December 12th, 2021. Howard, that's a nice pink hat. What's going on there? And a pink background.
It's not pink, that's a piece of art. Better than your prison headquarters.
Yes. back home. Have you been using your Peloton since you got it?
It's in my other house. I use it on the road, right? I just log in, but I generally prefer to ride outside. So not much has changed. Today I did 38.
That's amazing.
Mm-hmm. And I got a massage, so I feel pretty damn good. Is this on?
It is on. It is on.
All right. So what do we even know what day it is? You're getting so lazy, you're not even telling people what day it is.
I think I did. I said December 12th. All right.
What are you doing for Christmas? What are you doing for Christmas?
I think as of right now, we'll stay in San Diego.
And a boy.
What about you? Are you going anywhere?
Got Max here. Rachel coming home, so no, it's been beautiful here in Phoenix. Cold mornings, cold nights, but beautiful.
Yeah, here same in San Diego. I just got back.
Maybe come visit the Linsons.
Do you have enough room?
No, but
you can put me in the basement, right?
There is no basement, buddy. So tell people what you're seeing.
Yeah, so basically it's a two-phase bifurcated market. We have the Nasdaq 100 and the S&P 500. They bounced swiftly from their rising 50-day moving average. They're back near all-time highs and kind of setting up for a breakout. I mean, despite the fact that only 35% of the Nasdaq 100 is above their 200-day moving average, the index, the ETF itself is looking strong. And both of them, the Nasdaq 100, obviously a lot of divergences. So if there's any breakout, like I wouldn't trust it. You know, I would just treat it as a short-term trading opportunity. But the setup is the setup and the chart is the chart. And both of them are looking bullish. Obviously, small caps are weaker, as you can see right there below their 200-day moving average. And definitely showing relative weakness, and I wouldn't be surprised if they break down. So that's why I'm saying it's a very bifurcated market. The Fed is worrying about inflation. That's obvious. That will be the big theme for the next 6 months or so, and the market is worrying about what the Fed is going to do. And we can see that not only in the price action of small caps, but also in the price action of all the high multiple stocks, all the richly valued software stocks. Many of them continue to look vulnerable and show relative weakness. And even though last week the Qs and the SPYs finished near all-time highs, had a strong week. Personally, I saw better opportunities on the short side in individual stocks, like especially around in the software space. So many of them are just breaking to having like tiny bounces, dead cat bounces, and then just reversing lower. So there's definitely something a little bit for everyone. And even if you're bullish, we have like all the value stocks like Ford and GM breaking out.
Wow.
And Coca-Cola and like
McDonald's.
Consumer staples. Yes, I mean, I guess all the companies that the market perceives that they're either undervalued or they have pricing power, and who has better pricing power than Apple? I mean, they can afford to raise prices without any issues. So inflation doesn't really mean much to them. And this is why Apple has been such a harbinger. So it has been the strongest.
Yeah, I think, just to interrupt, like McDonald's and Apple control the narrative, control the supply chain, control, they've been doing it. This is the perfect storm where, Apple makes their chips, Apple has their stores, Apple can control their narrative. And if they're out of phones, it doesn't matter because no one wants a Google, no one wants an Android. If you got to wait a month for an Apple phone, you somehow deal with it versus getting an Android at some level. And then with McDonald's, I'm long both these. Wish I was only long these two stocks this year, but they're in my 8 to 80 portfolio, and I would have expected them to just, I wouldn't have expected them to have this. I mean, McDonald's is amazing, from their coffee to their dessert to their technology to their drive-through to their, but I'd prefer it being weak and tech stocks being strong, because it's been my worst year. I think this is a year of QQQ versus ARC. This is the year that proves that owning FANG for the last 5 years. So let's look at the weekly, or let's go to the monthly island on the QQQ. This is basically Facebook, Apple, Microsoft, Google, Netflix. And then you throw Tesla in now, right?
NVIDIA,
so
yes. Yeah, and Microsoft.
Yeah, and then, so from 2015, you're up 400%, maybe 500 from the lows. In ARC, which got all the press, and basically all they do was taking more risks, trying to stock pick around the QQQ, just like me, just like a lot of people, and I think a lot of people are just lying. This was the year that, market cap weighted stuff proved its worth, and the stock pickers are just, that outperformed for a year and a half, outsmarting the FANG and the market cap indices, are getting destroyed. And it'll be very hard for ARC to catch back up to the Qs, because if the Qs roll over here, that means Tesla's probably going to roll over. And I think that's what's been holding her portfolio up from total destruction. And so it's just really one of those interesting years. I'd like to beat myself up, but it's, I'm up on the year. It's just like I've said for weeks here, I've been trailing. I've been backpedaling all year. First, I gave up on China, then I gave up on Peloton. Then I feel like I'm about to give up on Zoom and a few other ideas. And the market's just methodically taking me out of stuff that I thought was bulletproof, right? Like my 8 to 80. So I think the thing that would surprise most right here, because we've already had a crash in a lot of the darlings like DocuSign, Peloton, Square, PayPal. Well, maybe not Square yet. So there's two things that I see that would not surprise me. Literally a crash, right? And by crash, I mean not a panic, just like technology, people pulling bids and that becoming a thing, or just the high growth stuff catches a bid here and really, bounces, because the shorts have been having a field day in these high growth names, like Upstart.
So many of those names are down actually 50% from their all-time highs.
It's like been shooting, and God bless them. They deserve to have their day, but they generally overstay their welcome. So, seasonally, I wouldn't be shocked at really the losers rallying here in the UN in the beginning of the year, and Apple and McDonald's and the consumer staples going sideways to down. That would probably be the most healthiest thing we see here, or the market panics on inflation headlines and people pull their bid on McDonald's and Apple, and the indexes catch up to the downside on that. I think one of those two scenarios could easily play out. I unfortunately have been stopped out of a lot of stuff, and I'm watching. Where's your head at?
As I said, it's a bifurcated market. There are opportunities on both the short and the long side. Personally, I find it easier to make money on the short side, and when I short, it's intraday. I don't want to take the risk of overnight gap. On the long side, what's been working is the mega caps and some of the value stocks that I usually don't really play. So I'm definitely have a large cash position right now and just try to be more nimble.
Mm-hmm. I look at the chart. Where's Nike at? I look at some of these consumer brands that have hung in there, and that's a tougher one because the whole sector. But if I look at, I think Lulu, it's finally coming. Finally, we're going to see. I got out of this in the high threes last beginning of the year, giving up on it, but it's held up the best. They came out with their numbers, and they knew what was going to happen. The mirror is an epic disaster. I think what saves Lulu here is I'll write that thing off quickly and not invest much more money in it because it's a dog, and get back to their focus on, fashion, and be grateful that Peloton's kind of not their mess now. But I think for Lulu and some of these consumer fashionology companies, the competition's coming, right? People aren't going to go back to formal wear. Everyone's wearing casual wear, and now everybody's coming for Lulu, right? Like they're the Amazon of casual, and those margins are going to be chipped away by thousands of competitors. Not that they're not a great brand and one that you may want to buy on dips, but I have a feeling that
Lulu doesn't really compete on price though, so I don't see how their margins are going to get affected, because
they haven't yet, so I could be wrong.
all of their competitors are actually charging more, like Alo and all the others. They're more expensive than Lululemon. So
I understand, but that money I would spend at Lulu is now going to Alo.
Exactly.
Okay. That's all I'm saying. So if margins, what I'm saying is people are coming at both ends for them. You can't be in the middle in this space. You can have a brand like Nike. I find that the other competitor stuff just more comfortable. But anyways, that's just one stock. Going back to look at McDonald's, are all the restaurant stocks big? Like, is Chipotle still running like McDonald's was?
Well, McDonald's is an exception. Like the other restaurants are not looking that strong.
What about Domino's?
Yeah, Domino's is actually looking healthy here, setting up.
Yeah.
Which interesting to see, like something like Dash, like after the big earnings.
But Domino's is coming for them, right? They're offering free delivery for local restaurants.
Yeah.
So DoorDash was looking like one that I may consider for my 8 to 80, but no. And I got to wait to see much more strength. Because that looks like a false breakout. Yeah. The other surprising one with Visa and MasterCard, I've been on the fence all year because of crypto eventually making their move. I don't own Visa, but I own MasterCard. I've been thinking of kicking it. And I'm just, waiting for either, a breakdown below 300 in a weak market.
They haven't really done anything for the past, basically, year and a half.
I understand. Are they biding time? Is that helping crypto gain more traction? Or is it, that's what I'm, it's such a strong company and it had such a good run that I don't mind waiting a year or two. But it's felt really heavy until the last week. So we'll see that there's some high volume reversal and panic selling going in there. So this is really an interesting tip. And, it's mixed, rates are low. The question is the Fed going to flinch? Excuse me, I got the hiccups because of inflation.
Yes. Well, record inflation on Friday, 6.8%. And
so you got home prices at all-time highs, commodities having an incredible year. You've got these, McDonald's, everybody's assuming Apple's and McDonald's are the ones that can continue, Lulu can raise their prices indefinitely. Something's got to give on this narrative. And that'll be the tell, right? Like, I don't know how this plays out.
I think the Fed is finally panicking. Well, not panicking, but worrying about inflation. And as I said, this will be the big theme for the next 6 months. Fed catching up. Like, if you remember.
Catching up, but like you said, like they're not, like the market's saying they won't price, the market's pricing in a rate cut next May. I mean, a rate rise next May. So it's not like the market thinks they're going to come out.
Yeah, but it's not only about cutting rates. It's also, they're removing their open market purchases, which have been definitely fueling the rally in the past year and a half, or like $120 billion a month.
But the home builders are acting not like they're going to raise rates.
Extremely strong.
But Schwab is acting like they could raise rates. I mean, they have such huge cash balances, so like Schwab's looking very strong.
And I
have never had a more confusing year, right? Like I have nothing to complain about, but I've never, it's a struggle. Like FANG is easy. It's easy to own FANG. It's easy to own the QQQ. It's easy to own the SPY. And that it just feels way too easy. And it feels like those index trades could be like what ARK was last year. Everybody just gives up
It could be,
and just,
but if this
yeah.
happens, this means that the high multiple stocks are going to experience 3 times bigger drawdowns than the indices, because this is what usually happens.
Yeah. It's the question. I've never seen. I just can't believe these drawdowns with the averages up. So, but these are big companies, McDonald's and Goldman and J.P. Morgan and Apple, that are holding the market up. How's the rest of FANG look? So Tesla's pulled back. Is Amazon pulled back?
Yeah, Amazon is a little bit weaker as of late, as you can see. Let me show you real quick. So kind of no man's land.
It's their no man's land has been, the AWS outages have been great for, multiple clouds, and Microsoft
super strong at near all-time highs. So it's Google setting up also for a potential breakout here near 3,000, let's call it.
Yeah.
Nvidia also strong, kind of pulling back lately, but the rest of semiconductor stocks are looking constructively, like the mid cap and stocks in the space are looking really good.
Teradyne looks really strong.
So quite a few names in the space, in the semi space, are looking good.
Like I said, I can't give it advice here, because it's just been a year that's kind of made me question some of my own picking. And you can't, I've always said QQQ over SPY, and even they're equal this year, the S&P pretty much equal. But, I keep it, for most, I say keep it simple. QQQ is all you need. You can layer in on 20, 30% pullbacks. The question is, I sold some Apple on Friday just because it had become overweighted for me. But, that's just
well, did you buy anything or just
no, I've still been in the cash raising mode.
Okay.
I'm overexposed to a couple things, so I'm just trying to my portfolio is different than other people. So stocks just don't make up a huge percentage of my overall portfolio. So it's not going to change my life. My private positions are what I have to manage. But anyways, I'm fascinated by what's happening on the tape. And it's humbling to see, I was like, if I look at Zillow, I was selling on the way up, as it crossed 100, and started buying in 100 on the way down. And now it's just back into 2018 prices. And part of that, again, is just that they weren't growing organically, and they were relying, anything that can't grow organically is getting punished. Right. And well, there's Opendoor. I'm looking at some of the other financials that I can.
I mean, for me, financials are not really actually acting that healthy right now, especially with the expectations.
Well, money's hiding out. It's not. They don't look bad. They've had a great run off the bottom.
Yeah, they're just going sideways. They've been going sideways for the past 6 months, basically.
Yeah, but they're not growth companies, and they're digesting huge gains. And if rates start ticking up, they benefit.
Yeah.
But anyways, I think we've covered enough tickers. I think you, like a lot of the good swing traders I know, and you being one of the best, are like high cash, which means something to me. A lot of the young people have moved to crypto. And so, and I think the rates are low enough that people, when they're confused, are just going to put their money in the Qs or the S&P and stop picking stocks. So, it looks all in all like the markets are holding up, doing, crazy multiples are getting punished on any mistake, and money's not coming out of the market. It's piling into what the market perceives as like.
Yeah, it's rotating currently into like defensive stock, consumer staples, healthcare, mega cap.
Yeah, where people feel there's pricing power.
Yes,
and
exactly.
We'll see how this plays out. It'll be interesting to see next week. Have a great week, buddy.
You too, Howard. See you next week.
All right, everybody. See you next week.